Yesterday I mentioned that it's likely that we're going to see euro weakness, and we got some, okay? The Italian elections are bringing some pressure. Where are markets going to go? Let's talk about it here at Capital Markets. Traders, guys, welcome back to Capital Markets. It's your host, Cleveland Bishop. I'm excited for you guys to be here. It is Tuesday. U.S. session is just about to kick off, and I want to break down these markets with you, all right? So here at Capital Markets, we break down things from a technical perspective and a fundamental perspective, so you guys have an overall market view. All right, so make sure you guys stay subscribed, and as always, please ask any questions you like, comment down below, and we'll be right there to answer them. All right, so yesterday's video I mentioned that, hey guys, it's likely we'll see a little bit of euro pressure because the Italian elections are coming up, and Draghi still tightening, but not able to tighten enough in terms of quantitative easing. We may see a little bit of sell side, and that's what we're seeing. Right now we have the Euro-U. It hit a low today of the $1.1509s. Okay, we're almost at the $1.14s. That was our target, that 50% retracement level that we were mentioning. But can we get there? We did see a little pullback during the intraday session. I guess that Euro session is wrapping up right now. Maybe we will, okay? But other than that, folks, we're getting that weakness. You can see a massive amount of weakness actually coming in as well on the Japanese crosses. Here, take a quick screenshot here of the Euro JPY, Aussie JPY, and the GBP JPY. This is the most sell side we've seen on the Japanese crosses in months. All right, what's going on? Well, you see a lot of repatriation of capital coming back into the Japanese economy because of all the fear that is weighing in the euro, okay? You have a lot of Japanese investors in the euro. Those Japanese investors are trying to escape that negative interest rate policy that Japan has right now. Right now, they're functioning at a 0.01 interest rate, all right? It's a negative interest rate as well. No one else is doing that in the entire G10. So those investors put money overseas. They put money in Australia. They put money in Canada. They put a lot of money in the euro. But when things get turbulent, okay, when things can get volatile and speculative as to how the euro is going to perform, that money is repatriated back into Japan. Okay, that's why we see this massive sell side move. But what this means is if everything settles for the euro, and if this Italian election thing is just a bluff, then you will see a massive pullback coming in on these Japanese pairs. So that's something you may want to keep a lookout for, okay? The markets potentially are overreacting to this data that's coming out when it comes to the Italian elections. That might be your edge, okay? Keep a lookout there for the Italian elections and how they're actually going to unfold. And you might have a few pullbacks coming in on some of these cross pairs that include the euro, all right? Now, outside of the euro, we do have some data that's going to be released this week for Canada. They have a bank statement, all right? Is Canada going to raise rates or not? That's going to be a pretty important subject matter. Right now, Canada, coming off a massive April, saw a lot of consolidation, a little bit of sell side in May based off of, again, how they're going to heighten rates or not. Last year, Canada was the top performing G10 economy. Here's a quick screenshot of the last year's performance. You guys will see a massive sell side move, only for markets to pull back here in 2018. And now, subsequently after that, we have another scenario where Canada may find itself in a tight spot based off of how its GDP is performing, okay? CPI across the board has been hard to miss target for a lot of different economies outside of the U.S. Will Canada perform? All right, here's a quick screenshot here of what the Canada interest rates are at the moment. An increase in that rate number would obviously add to a tightening of the actual economy itself, bringing more cash flow into the Canadian dollar, increasing the currency parity. That means you'll see a sell-off there on that US dollar CAD. All right, US dollar CAD coming off of its lows, right now sitting at some highs from a monthly perspective. If we get a higher rate hike and a higher rate hike than expected, then trust me, we'll see a massive sell-off there for the CAD. And outside of the CAD, the US dollar coming off of a bank holiday, still somewhat stagnant. But remember, we do have a lot of data that will be dropping on Friday. Non-farm payroll, average hourly earnings, unemployment claims. Okay, this is still a big week for the dollar, but we still have to move over into June. All right, guys. So look, if you guys need any help, please comment down below. We'll be right there to answer. Make sure you guys stay subscribed. And remember, Capital Markets, we're a broker, one of the top brokers in the entire UK. Make sure you guys open up an account today. Head over to capital-markets.com. If you need tighter spreads, all right, which means you're going to be paying cheaper per trade, please start executing with us. And if you need fast execution, we route for some really great liquidity providers. Go over to our website, capital-markets.com, and check us out. I'm Cleveland Bishop. I'll see you guys tomorrow.